Please settle down. The next session is by Mr. G R Balaji on valuation of a business. G R Balaji is a frequent speaker at TIA. He has got total of 18 years of experience in financial markets. He's got in-depth experience across various functions in asset management and wealth management. He frequently writes in the Hindu. Balaji is currently the fund manager for iThought's True Blue and Solitaire funds. Over to you, Balaji.
கொடுத்துட்டேங்க. ஓ இங்க இருக்கா? இங்க இருக்குமா? அப்போ done. Yes. I want to next slide. This is previous slide. Yeah. Yes. Okay. That's fine. I think I'm this is okay. This should be okay. All good. I'm a very good afternoon to all. Thanks for the opportunity. Very difficult, right? Post lunch, we are going to have a session on valuations. My friends did a very good job on P&L, balance sheet, cash flow. Finally, a difficult topic, right? How to value an asset. So before getting into the presentation, I thought, ஒரு நல்ல பிக்சரோட ஆரம்பிப்போம். And I thought, I think no better picture than this 5 men searching for the value in different way, right? In terms of long-term investor trying to see something, short-term investor trying to see something. A lender also looks at the company in a very different way, right? He's all worried about what? Which metric? Cash flow. Correct? Assets வச்சதும் பண்ண முடியாது. NCLT எல்லாம் போய் 7-8 வருஷம் ஆகும் ரெக்கவரி ஆகிறதுக்கு. கரெக்டா? Cash flow. Rating agency wants to give a rating, keeping எப்படியாவது அது AAA இருக்கணும். கரெக்டா? Because it's all about reputation. So value, one thing is very clear. It's not single number. It's not single metric. Right? It differs from everyone, but still there is something called value. So there are 4 important topics I'll be talking. One is introduction to valuation, overview of valuation methods. What is the end game? Basically, நம்ம ஏன் இத பண்றோம்? By next 90 minutes, you should definitely know ஏன் the valuation is so critical. Why? Any answers? We are here for what? Eventually, to make, yes, to make money, to make returns, to take a very informed decision. Can I tell? Random decision எடுக்கிறதோட ஒரு informed decision எடுத்து தப்பானா கூட பரவாயில்ல. கரெக்டா? Because then at least you know there was a method to your process. You made money, good. If you not made money, you can still learn something. Random ஏதோ ஒன்று பார்த்துட்டு ஒரு யூடியூபை பார்த்துட்டோ இல்லை something you do, right? When you lose money, you also know நம்ம தான் எதுவுமே பண்ணலையே. கரெக்டா? That is the end game. Because நம்ம ஒரு செஷன் அட்டென்ட் பண்றோம், ஒரு கத்துக்கிறோம்னா எதை நம்ம what you want, be very clear. And finally, as usual, summary and key takeaways. So why we need to value asset? Because it helps you to take sound investment decision. Sound investment decision. Effectively, valuation also requires lot of imagination and discipline. Yeah, discipline is understood, correct? But why you think imagination is required? It's future, correct? How much future? 5 years, 10 years, correct? See, one thing you have to remember, ஒரு TAM-னு ஒரு word யூஸ் பண்ணுவாங்க, total addressable market opportunity. ஆனா அந்த மார்க்கெட்டை இவால்வ் ஆகும். கரெக்ட்? ஒரு கம்பெனி ஒரு ஃப்ரீ கேஷ் ஃப்ளோ ஜெனரேட் பண்றாங்கன்னா He can enter into new business after 4 years, possible or not possible? Correct? So if you are valuing today, you need imagination, correct? It's not what is spoken. It's more important what is not spoken. We have to imagine. Swiggy start பண்ணும்போது ஒரு ஹோட்டல்ல ஏதோ பண்ணிட்டு இருந்தாங்க. But you should have seen, okay, இந்த இன்ஃப்ராஸ்ட்ரக்சர் இவங்க முடிச்ச அப்புறம் ஃபுட்டை மட்டும் டெலிவரி பண்ணுவாங்களா இல்ல வீட்ல கிராசரி டெலிவரி பண்ணுவாங்களா, இப்போ எதெல்லாம் டெலிவரி பண்ணுவாங்கன்ற ஒரு question we should ask, correct? That's why this imagination is very, very important. So once you have this two, there are 4 things are very critical piece. Luckily my friends have covered already in the morning. First thing is cash flow. ஒரு பேலன்ஸ் ஷீட்ல 3 விஷயங்கள் or annual reportல 3 விஷயங்கள் பார்ப்போம். பேலன்ஸ் ஷீட், P&L. The third item is a cash flow. But for a valuation, cash flow is the first item. ஏன்னா அசெட்ஸ் வச்சும் நீங்க பே பண்ண முடியாது, P&L வச்சும் எதுவும் பண்ண முடியாது, cash flow வச்சு தான் salary கொடுக்க முடியும், ஏதாவது பண்ண முடியும், கரெக்ட்டா? So it's very, very, very important. It's a third statement, but it's a more important statement. The second important statement is balance sheet. The last important statement is P&L. P&L is prepared for tax purpose. Cash flow is prepared for the organizational purpose. அந்த ரெண்டு பர்பஸை நம்ம கரெக்டா புரிஞ்சுக்கணும். செகண்ட், வேல்யூ ஆஃப் த ஃபியூச்சர் growth. ஃபியூச்சர்ல எவ்வளவு growth இருக்க போகுது, எங்க இந்த growth வரப்போகுதுன்ற ஒரு புரிதல் கண்டிப்பா நம்மளுக்கு வேணும். தேர்ட், ரிஸ்க். It's a very important topic. Last 4 years we forgot what is risk, correct? No, it's a reality. we na sonna, including the culprit starts from where? Me. ஏன் ஒரு ஸ்ப்ரெட்டி புல் மார்க்கெட், எதை வாங்கினாலும் மேல போகும். நீங்க கண்ணை மூடிட்டு வாங்கினாலும் மேல போகும், கரெக்டா? அது கவர்மெண்ட் செக்டர்னா சொல்லவே தேவையில்ல, ஒரு ட்வீட் போட்டனே மேல போயிடும். But all that is end, right? Now every day our market is decided by which market? Which 1%? Actually valuation is all about today 1% T, correct? Having said, that is what the impact, right? But the risk, sometimes நம்ம வந்து risk மாதிரி யோசிப்போம், but risk is real, and today I'm sure it's really, really real. And finally, timelines of these things happening. சில பேர் சொல்லுவாங்க growth வரும். ஒரு கம்பெனி பத்தி நான் பேச போறேன், this is only from academic interest. Last 20 years அவங்க கன்சிஸ்டண்டா PPT போடுறாங்க growth வருதுன்னு, ஆனா 20 years அவங்க grow பண்ணல. Now either you believe the number or you believe the PPT. They do good PPT. Of late they're using AI technology also. That's what I understand. Right? So we have understood ஒரு நல்ல valuation tool will help us to judge the asset independently. இதுதான். ஆனா இமேஜினேஷனும் கண்டிப்பா தேவை. Some truth about valuation. So I also used AI to some extent to get these pictures out. Not like my friend. The first thing is all valuations are biased. Right? யார் வேல்யூ பண்றாங்களோ அவங்களோட பயாஸ் கண்டிப்பா அதுல இருக்கும். So when you say someone is saying this, her bias is very much part of it. We have to accept that there is a bias. The question is how much bias. If you say this valuation doesn't have any bias, அங்கே ஒரு bias தான், கரெக்டா? That's called ignorance bias. The second truth which my good friend also spoke, 1 plus 1 not necessarily 2. In math, it is 100% 2, correct? Valuation math edichana, I don't think there is any analyst required, correct? It is slightly beyond math. I'm not saying அது வந்து 6, 7 இல்ல, ஆனா 2 தான் இருக்கும். இந்த கம்பெனி 20p தான் ட்ரேட் ஆகணும், கரெக்டா? Not necessary, correct? This is where it is no precise number. அது ஒரு ரேஞ்ச். அப்படின்னா இந்த வாட்டர் பாட்டில் வந்து 10 rupees, ஒரு 12 இருக்கலாம், 8 இருக்கலாம், but it should not be 100 or it should not be 1, correct? So it's a range, not a precise number. You're getting it? Perfect. Third truth, simpler the better, correct? Only higher derivative mathematics, I'm a commerce student, caveats, always simple things I will try to do it. ஆனா there are models which become very complex இருக்கும் ரிப்போர்ட், என்ன சொல்றானே புரியாது, கடைசியா ஒரு நம்பர் வந்திருக்கும். I always believe simplicity always scores more than complexity for simple reason. எந்த வேரியபிள் மூவ் பண்ணா எவ்வளவு மூவ் ஆகும்ன்றது the who did it only will know. The more the complex, they also will not know எங்க தப்பு நடந்துருச்சு, correct? அதே மாதிரி simple business is far better than complex business. Which is the one company both the speakers spoke in the morning? ஏன் அது HUL எடுத்தாங்க? தற்செயலா நடந்ததா? ரெண்டு பேரும் பேசவே இல்லை. I have also taken a very similar company like HUL. ஏன்? It's very, very simple. Who doesn't know business kala polam? The first thing, the product. Do we understand the product? Yes. Can you touch and feel the product? It's a daily spend. Trump என்ன சொன்னாலும் நம்ம செலவு பண்ண போறோமா? இல்ல. It's very important. ஏன் தெரியுமா? அப்ப அந்த பிசினஸுக்கு கேஷ் ஃப்ளோ கன்சிஸ்டண்டா வரும்ன்ற ஒரு புரிதல். இந்த பிசினஸை வேல்யூ பண்றதுக்கும் somebody selling some big product in USA today அந்த பிசினஸை வேல்யூ பண்றதுக்கும் டிஃபரன்ஸ் இருக்கா? So as an investor also, what type of a company we choose to invest, we should know. Generally, we end up buying a company where ஒரே ஒருத்தர் தான் கஸ்டமரா இருப்பாரு, அது கவர்மெண்ட். கம்பெனி பயங்கர ஆப்ரேட்டிங் ப்ராஃபிட், அதெல்லாம் எத்தனை வருஷம்? 2 வருஷம் ஓடும். HUL அப்போ வந்து கம்முன்னு இருக்கும், ஆனா HUL 100 வருஷத்துக்கு டிவிடெண்ட் கொடுப்பான். கரெக்டா? So simple is always good, both valuation models as well as business. The last thing on truth about valuation is there is no two company similar to same. So ஒரு இண்டஸ்ட்ரி எடுத்துப்போம், அந்த இண்டஸ்ட்ரியில எல்லா கம்பெனியுமே ஒரே PE கிட்ட இருக்கணுமா? அவசியம் இல்லை, ரைட்? You just look at this small example. Again, I have taken for an example all the 4 listed asset management companies. Just 2 metrics now. There are hundreds of metrics to judge a company. I've just taken 2 straightforward metrics. One is dividend payout ratio. ஏன்னா இந்த மாதிரி கம்பெனிக்கு there is no requirement of capital. And the denominator illa like HUL. But if you see, Nippon Mutual Fund pays close to 100%. HDFC pays 77%. UTI pays 78%. Birla pays 50%. Anga or difference. Now you look at return on equity. How much capital you have? The highest is again HDFC, Nippon. Correct? So you clearly know the market multiple of Nippon and HDFC should be higher than. Correct? So when people say, right, oh, in the company 24, this is 16, this is cheap. There are no two companies similar. Do you agree? That is where, okay, இது 24, இது 16. இது 16ல ட்ரேட் ஆகணுமா இல்ல 20ல ட்ரேட் ஆகணும்ன்றதான் கேள்வி இருக்கணும் தவிர அது 24ல ட்ரேட் ஆகிறதுக்கு வாய்ப்பே இல்லை மேத்தமேட்டிக்கலி. Do you agree? So when we say அந்த 24 நான் வாங்க மாட்டேன், I'll buy the cheaper version. No, that is not the cheaper version. That's an inferior company. Will trade cheap. I'll show one example of ஒரு 14 PE stock வாங்கி 10 years காஸ்ட் பண்ணாத ஒரு ஹிஸ்டரியும் காட்டுறேன், right? So when how low PE can cost all of us. So 4 truth is very clear. These are biased, they are not precise, and there are no two other companies are very, very similar in nature. Now let's get into the crux of the topic. The way you value a company, there are many methods, but obviously at a broad level, something called intrinsic value, DCF annuanga, economic value added, which I'll tell you, it's again a very consulting way of valuing a company, but a very good metric. The last one is the most used and most relevant for all of us. The first two, generally you can't use it every day. You're getting it? So relative will be a very big chapter, but that's what practically we can use. But as a practitioner, we also use intrinsic. So obviously I'll share it. What is intrinsic valuation? Simple. Every asset has a capacity to generate cash flow. So ஒரு asset-ஓட எவ்வளவு capacity cash flow generate பண்ண முடியும், அதோட risk என்ன? So this is what typically, right? So let me give you a good example of an FD. Anybody can share? You put a 1 crore FD, 8%. How does this play out? You get 8 lakhs as interest. After 1 year, you get the maturity. Correct? Simple, straightforward. An asset has a cash flow, so you can value it. Correct? Similarly, every asset, including equity, has a cash flow. That's the value. That's the intrinsic value. The popular method is called discounted cash flow. Why the word discounted is used? Inflation. Very good. So inflation is one reason we have to discount it. Which inflation? Vegetable, tomato inflation, home inflation, or inflation reported by government? Broadly, that's a number we take. So inflation is one. Second, risk, opportunity cost, correct? So how do we do discounted cash flow? Philosophically, every asset has an intrinsic value. So there are three things you need. First, you need to find an estimated life of the asset. So sila assets ku pathina 3 years irukum bond. FD can be 3 years, but equity ke it's perpetual. But typically what we do is till 10 years ku value panni adukapram there is something called terminal value nu kandupidipom, because these are long bonds. Estimate the cash flow. Finally, you apply a discount rate. Why it is very important now? DCF is not influenced by market mood. Do you agree? It is influenced by the asset ability to generate cash, asset ability to generate how long the cash, and finally your discount rate. It will not affect because tomorrow morning I am feeling very, very bad, I'll go and sell all the stock by FIs, right? The price will correct. And a DCF value will not change. So some advantages of DCF enna, it is very, very less exposed to market mood, which is very, very important today. Yes or no? Why? Today, because of market mood, every day market is either going up or down, right? So as a practitioner, we do a DCF few companies and see, is the value is same? If the value is same and the price is going down, it's becoming cheap or not? Correct. Then what do? You end up acting favorably, correct? So it is very, very less exposed to the current market mood. That's the biggest benefit. The second thing is, forces you to think about the underlying firm. And the company in the mari operate agudhu. And the company ki evla capital thevapadum. And the company in the mari growth varum. So sila particular vishayam and the company patti neenga nariya purinjikano. You have to do lot of work, right? So that will make you. When I share some example, you will be able to see a better. Third, at least you will know you are buying a long asset and not immunized by the near term. Price keela போறதுனால நீங்க பயப்பட தேவையில்லை. By doing a DCF, you know in the asset இவ்வளவு cash flow generate ஆச்சுன்னா இந்த value இருக்கும்ன்ற ஒரு confidence will make you to hold on to the asset. But definitely every model comes with its own advantage and disadvantage. The big disadvantage is it requires lot of explicit inputs. என்னென்ன input கொடுக்கணும் ஒரு DCF க்கு? First, current எவ்வளவு cash flow generate ஆகுதுன்னு நம்ம கண்டுபிடிக்கணும். Second, growth எவ்வளவு வருஷத்துக்கு இருக்கும்ன்றதை கண்டுபிடிக்கணும். And I'll show you how difficult to anticipate growth. Third, அந்த terminal ஒரு 10 வருஷம் கழிச்சு என்ன ஆகுவான்றதை நம்ம explicitா punch in பண்ணணும். And finally நீங்க சொன்ன அந்த discount rate apply பண்றதுலயும் ஒரு பிரச்சனை. ஏன்னா 10 years back, what was the average FD rates? Anybody can share? 10%? 10% was easy. Today, what is the maximum FD rate? 7%? 8%? நான் சொல்றது SBI FD rate, not some. We always speak the gold standard, HUL, CRISIL, not. I'm just telling. 8 தான் எனக்கும் சொல்லுங்க அப்புறம் செப்பரேட்டா. We'll deal it, right? So the whole idea is that rates is coming down, correct? So what is the discount rate you will apply after 10 years? Is it 8%, 6%, 4%? Right? Our FD rates will go down. If you see RBI policy, those who are having money, be very, very clear. The governor said only one thing. We are going to go the rates down. People celebrated. But for a saver, you should know there is something called reinvestment risk. The future money you generate, you can only deploy FD at the rate lesser than today. Correct? That is what he meant. As a borrower, you will smile. As a saver, you will suffer. But that's part of the economy, right? So that's the first thing. The second thing, lot of noise, manipulation is possible. நீங்க எந்த ஸ்டாக்கையுமே using DCF, you can say it is cheap. And I'll show you one example. Right? ஒரு சின்ன ஒரு நம்பரை நீங்க மூவ் பண்ணீங்கன்னா பாலாஜி இங்கிருந்து அங்க போயிடுவான். I mean, the value will change dramatically. Correct? So we will say, இந்த ரிப்போர்ட் வந்திருக்கு, இந்த ரிப்போர்ட் ஃபேர் வேல்யூ தான் சொல்லுது. ஆமா, ஏன்னா instead of 10% discount rate, I changed to 8%, which is only 2%, the value will move by 100%. Correct? So, analysts at times, they get over bullish and punch in, na in the stock a buy in podano. Now you know what you are supposed to do, right? There is something called iteration. Tell me a number which will ensure that there will be a buy report. Correct? Today AI will do that also. I tried that also, right? In the stock, what is implied? It is telling you 12%. So you know, today so many things can be changed to show the report, good report. The question you should ask is, the assumptions are real or illiya? See, the math yaru fraud panna matanga, correct? 1 plus 1, Excel la vandu 2 da varum. Ana the 1 podama 6 nu potingina 12 varum, correct? So that is what we need to question as an investor. So I'll show you one good example. So I'll tell you how DCF to be done. So DCF example 1, similar growth assumption both for high growth phase and terminal growth phase. The first column pathina free cash flow. What is free cash flow? I think session 2 la correct. So generally cash flow minus capex, capital expenditure, you will get the free cash. That money is available to pay back to the, if at all you borrowed, or you pay back to your long-term equity shareholders. So money available to pay back. That is called free cash flow. So all DCF method is done by the free cash flow. So first number is 1331. This is a live company. Without quoting the name, I will tell you. The second one, the growth rate assumed is 10% for 10-year period. Correct? Terminal growth on 10%. What is terminal growth? My assumption here is perpetual in the company 10%. Now you don't ask me why did I put? To teach only. Correct? Discount rate 12%. It means you have a risk-free 7, equity risk premium 5, discount rate 12%. If you do the math, sorry, of the cash flow 1331. So you have 100 போட்டிருக்கீங்க 100 cash வச்சிருக்கீங்க. It's growing at 10%. So 110, 121, correct? That's how you grow, right? So this 1331 crores has become 1464, correct? Has grown to 1600, 1700. 15th year pathina 5560 crores free cash flow this company will do. That's what the math is selling. And terminal 1 year forward panni, you will do complete discounting, which is 55. So if I do a discount rate, you know the discount rate? And the 12% number every year deduct pannirom. So the 1 will become 0.89. Why? The money is coming after 1 year. So if that money has to be today, I have to discount it by 1 year. So that 1 has become 0.89, correct? The 0.8 is, that money is coming after 2 years, correct? So I have to do 2 years discounting. 12, again another 12%, right? Which will lead to 0.8. So you add back everything, no? The present value of the cash flow is 73,000 crores in the company. So an analyst or buy report kudukunona, the company market cap is today 35. My valuation is saying 75, 74, 100% gains, 52% discount. Good buy stock? Yes or no? This is a fantastic buy report, no? In the report வந்துருச்சு. அதுவும் பெரிய இன்ஸ்டிடியூஷன்ல இருந்து என்ன பண்ணணும் அடுத்தனால அது ஒரு 100 ஷேர் வாங்கி வச்சுப்போம். கரெக்ட்டா? How many of us has more than 30-40 stocks? All of us have? Because somebody will do some report. Just take it for granted. The question you should ask is, this 1331 you cannot fudge. Correct? That's a factual number. இன்னைக்கு நீங்க அந்த balance sheet la எடுத்தீங்கன்னா அந்த நம்பர் இருக்கு. So that I cannot change. But I can change these 3 numbers. First, how confident the first 10% growth. Balaji, 10% is not easy. It means 100, 110, 121, 133 அப்படி grow ஆயிட்டே போகும். கரெக்ட்டா? Show me the evidence in the last 10 years. Is this company has grown 10%? It should be a first question. So one of the things which we should do is, again I'll go back to my friends who took HUL. Invest in company with track record. Track record illada company la, when you invest, you should be aware you don't have data to back your conviction. Correct? Someone asked me, why you don't do IPOs? Some IPO work very, very hot. I said, The only point is I don't have data. And I deal with whose money? My money or your money? When I deal with your money, now one seat belt illa, mudinja rendu seat belt potukano, correct? That's a moral responsibility. Nothing legally also fine. There is a moral responsibility. No, you are believing me sitting behind with your kid. I have to drive safely or not? 100%. Correct? So in the first kelvi enna, Balaji, did this company ever grown 10% consistently? Show me the data. Correct? And the data irukadu. Most of the bull market la, correct? நம்மளுக்கு தேவையில்லை. நம்மளுக்கு வேண்டியது என்ன? மண்டே வாங்குறோம், மண்டே 3:30க்கு இந்த டிக்கெட் எங்க இருக்கணும்? Now it is different, right? 12 o'clock மேல இருக்கும், 3:30க்கு மறுபடியும். The trick is the second one, friends, the terminal growth. It means 10 years கூட பாலாஜி நான் ப்ரொஜெக்ட் பண்ணிடலாம். I saw the data. 20, 30, 40 years this is going to grow at 10%. World is growing at what rate, friends? World is growing at, as of before month it was 3%. Now I leave the best of judgment to you, right? It's going to go down. Yesterday I was in JP Morgan call in US because US corporates are declaring numbers. Indian companies also started declaring numbers. The amount of uncertainty is said, right? If anybody is going to give you a projection, right, they are actually fooling. Such uncertain documents been spoken. So 2% the world is going to grow, 2.5. If I want to say this company will grow ever 10%, like a 3 feet guy will go to 6 feet. Can I say the 6 feet guy will go to, like someone said, right, Amazon will continue to grow, Google will continue to grow. Kitna? After world GDP, beyond that they can't grow, right? Or point the growth will get matured. So again you have to go and see, is there any company has grown for 30, 40 years, 10%? Or kelvi kekanuma? If you ask, right, there will be only 1% of the company would have done it, if at all, correct? I'll show one example of that company. The last question is discount rate. Why it's only 12%? Why not 14? Why not 10? If you ask this 3, right, you will do it. So to prove this point, I just changed one variable. The terminal value moved from 10 to 6, which I think very realistic. You want to see the answer? Look at how markets are efficient at some time. We think markets are rumba efficient illa. Markets are reasonably efficient. Without seeing the number I punched in, no other change. 1331, same company, very good company, high free cash flow company, 10% growth, but I changed the terminal growth to 6%. Discount rate. What has happened? Current market cap and the valuation model are precisely to the T. Look at that one variable moving from 10 to 4, which used to be 75, basically 100% gain in the position has become today, right? This is what I said, no. If the analysts choose to manipulate, you will feel, oh, the gains. So DCF model, as long as you are able to punch in these assumptions right, correct? It's very difficult, but you should do it. Why? If you know this company can do 8% growth, you will get your value of that company, right? Any guess which company is this? It's Nippon Mutual Fund, right? Okay, my last line is even more important. I've added. The biggest trick in any valuation in DCF is in the number. Terminal growth rate, significant impact on the valuations, correct? A 4% changed is changed the entire narration. Now I'm going to show you one company where you assumed 10%, but the company delivered 20% growth. Very difficult? Okay, equity has 30 years life in Chipo. We will do a model for 10 years. After that, we say this company is going to grow at one rate and we'll just discount it one shot, the balance of the life. And the balance of the life can be even 1,000 years, where you and I probably will not be there, but the asset will be there, correct? So that's how the DCF models are built. 10 to 15 years project பண்ணுவாங்க. Beyond that, they'll say, I'll just do all the cash what is available at one rate. There is a mathematical formula. So Very good question. Your good name, sir? Santosh. Very good question. I'll tell you. This is the question I was waiting for to answer before this slide. So thanks, you raised it. That's why I said thank you. The terminal growth rate is a function of good management. I'll reiterate. Terminal growth rate is a function of good management, good people. Why? They do an initiative after 5th year, which you and I and they also don't know, will push the growth another 20 years. Possible? Amazon started as what company? Which company? What are they doing? Bookseller, correct? Then they pivoted to, so you valued a book company for 10 years, correct? Correct. Anna, Amazon was a book company for 10 years all along? No, what did they do? They moved e-commerce. So suddenly the story changed. After 5th year, the next 10 years, not only book company, there is a Kutti Bhagavati Mari, right? So you got an e-commerce. So terminal value stretched. After that, what is that? AWS. Highly profitable, correct? It means one more mountain, one more growth, and very profitable growth. And the story is going on. So terminal value, very, very difficult to compute, correct? So Amazon was always an expensive stock to buy. But those who saw Jeff Bezos, they said, this is the guy who will not have death. Terminal growth, varadu. Correct? In a way, this 5% or 6% is just a mathematical exercise. He will continue to grow at 15% forever. But there will be only one Amazon, right? We should not apply terminal value to every company. Friends, the terminal value and the terminal rate is applied only to the exceptional companies, correct? Like HUL, and one company where when people assume 10%, the company delivered 20% terminal growth. Any name, one such company which has done phenomenally well to all the shareholders for last 30 years. This is one of the, not HUL, one of the finest blue chip like HUL. HDFC Bank, being a bank, will not pay a lot of dividend. So DCF model panna mudiyadu, but it's a great company. Taken, point taken. Next. ITC, a very good company, but not a great company. Very good point. TCS, again a great company, but slow growth company. But all these are good names. Okay, very close. Asian Paint was a great company. I mean, it's still a great company, struggling because of heavy competition, but you're very close. The closest friend of Asian Paints. Yeah, it's Pilite. Friends, I think if someone was to study annual report, my first annual report to go to is Pilite. It's not today. You take 1996, 97 or 2000 annual reports also, right? Gold standard in terms of information clarity. And all the investors, when I met their AGM, right? Most of the shareholders are 60, 70. They were like hugging, I mean, on the promoter, they are so close. So you realized the true wealth they have generated for 30, 20 years, it becomes like a family event types, right? So look at this company, very interesting company to explore. So if 2005 we did a DCF, right? Balaji presented, let's do a DCF for Pilite. 10 years ku nama growth rate podrom. But what would have happened in 2015? The growth rate should have been assumed as 5%, 6%, 10%, correct? Beyond 10 la neenga poda mudiyadu. And terminal growth rate cannot be higher than discount rate. First of all, please, one caveat. Any idea? Then your PE will become infinite. So terminal growth rate definitely mathematically has to be, if not higher, definitely equal to manakodadu. It should be lesser than that. So that's a constraint of a DCF. So in Pilite, a good analyst would have projected first 10 years 20% growth, after that 6% growth. He would have given a 40p. But think about Pilite, 2005, 2015. But 2015 kapra the growth rate it should have been 5, right? If you look at after that also, Pilite has been growing at the rate more than 10%. Correct? What you will do? So this is where having the judgment about the management, how they grow. So you sometimes see a company on the 30, 40, 50 people trade ago. The shareholders are very, very clear, the growth rate will not go down. But these are exceptional company. Don't apply this metric to average company and below average company. This is an extremely exceptional company, but a point is terminal growth not necessarily should come into 6%, 7%. But when you model, you should do that. But you should also know if you're dealing with exceptional management, with a good business, they can grow beyond what you and I can imagine today. Do you agree? This is what Pilite at least gave the example. When some company I pay 40 PE, my shareholder comes and asks, Balaji, high PE stock vechirukka. I know. I do know. I do a DCF. And what DCF doesn't tell, no, he will do something after 4 years. You and I will get to know. Then you will be wondering, oh, but you don't ask me now what he will do. I don't know. Correct? That's the beauty about valuation. That's why I said 1 plus 1 is not necessarily 2. So someone says, valuation or Excel, you can't make money out of that. You have to just understand intuitively, should know the people. The more you know the people, you know that guy will do hard work to get the growth up. This is a very good metric. One friend was using my corporate India metric in terms of result classification. This is a metric which will tell you for different growth rate, different terminal growth, what is the P. So a 6% growth company, both on the 10 years high growth phase and terminal growth 6%, the PE will be 17. Correct? But if a company is going to grow 10%, terminal also grow, it's 55. It means if you find two companies, one at 55, one at 17, don't say 55 is costly, 17 is cheap. No. 55 is designed to grow at 10 and 10, it's perfectly priced. If 17 is going to grow 6 and 6, correct? It's perfectly priced. So they both are perfectly priced stock. When you buy, no, you buy this stock when they are available at 12 PE, correct? You make good money. If you buy 25 PE, this company, will you make money? But to buy, you feel comfortable, no? I did not buy 50 PE stock, I bought only 25 PE stock. Yes or no? This is where sometimes valuation will tell you, even though the stock PEs are low, it is designed to be low. And some company like HUL or good business model will trade. It's mathematics, it's nothing, right? I'm not saying you should pay high PE for every stock. But if you find a company with a 20-30 year of track record of creating wealth and growing, they will have high multiples because of at least simple mathematically you will get this valuation, right? Why will someone will sell this stock at 20 PE? Unless there is a market meltdown which the Trump has to induce, correct? Which could be a good opportunity. If you find a great company like a Pilite at 20 PE, you know what you're supposed to do. Not only invest your money, I'm not telling leverage, but that should be your, right? See, 2008, COVID lows, DCF model would have given you full toss 6 because lot of companies are priced for zero growth. And you know this company will grow 10%. You know after few months the growth comes back, you make a lot of money. That is what happened to all of us. Yes, sir. Oh, I'm coming. I think you have hit the point. Nifty PE paaka kudadu. So I'll come to that point. Just give me some time, right? But you got this. So 55 PE doesn't mean expensive. 17 PE doesn't mean cheap. But most of the company, I'll tell you, should trade less than 25. Don't tell now, Balaji, the number of stocks illa. That's where I will say no, markets are expensive. Because this all start with something. What is the first number of this model? Free cash flow. Most of the company doesn't generate sufficient free cash flow. So most of the company should trade at 25, 30. We paying 50, 60 all is more like a illiquidity premium and not real value. Yes. Yes. We can have it. See, MRF is again a good company, but doesn't generate a lot of free cash. So this is the only method. There is other method which I'll show you. But I think PE will be a better method because anga vandu cash romba generate panna matanga. But like a HUL, TCS, asset light companies, right? Service business, lot of cash they'll generate. DCF will give you a good idea. Balaji refer pannunga. That's always I feel connected. See, this G is okay, it's a variable, but what G? 1 year growth, 5 year growth, 10 year growth. One thing I'll tell you, when markets are super bullish, no, people will do 2 year PE எல்லாம் கொடுப்பாங்க. அப்படினா 25 இல்ல 26 இல்ல 27 28 earnings. Stock is trading cheap at 25 multiple. 28 எங்க இருக்கு? 1000 days இருக்கு. ட்ரம்ப் வந்து 600 days நியூஸ் கொடுக்க போறான். கரெக்ட்டா? So we have to generally look at trailing PE. Worst case 1 year forward. Don't try to go 2 year, 4 year, 5 year forward saying I'm achieved in 2047, but we have to survive tomorrow, right? Ama. See, I'm just giving you a calculation. Not necessarily every company should be discounted by 12, but just to make it life simple, no? Adukkaga da. You are right. So, it's also a function of good management. Imagination. Correct. Perfect point. See, and the company terminal growth panna kudadu. Zero terminal. Okay, I'll tell you one company here. I don't want to name the company, but where your father and mother are using the product, you know the product not using, your kids don't even know the product. Sir, நான் என்ன சொல்லி ஆரம்பிச்சேன்? இது சபைக்கு பொருந்தது இல்ல. ஐடிகாட்டல் இந்த மாதிரி ஒரு ப்ராடக்ட் இருந்தா நீ டெர்மினல் வேல்யூ எப்படி போடுவீங்க? But you made a point, right? It's all for education. See, it's a big problem, right? You can't give terminal value, correct? What do you see in your iPad? My daughter. What channel? Netflix, YouTube. Basic. They don't even know this channel exists ever in the life, correct? நம்ம போய் DCF போட்டு terminal 6% growth போட்டா கூட என்ன? அது -6% growth. அவங்க தான் நம்மளுக்கு காசு கொடுக்கணும். I mean, not this business. There are many business. And I'm going to show one company, product company, for 15 years they put the PPT. I'm showing to show that. So we'll come. Fine? அங்க terminal கொடுக்கவே கூடாது. It should be zero. If at all negative. See, the market once realized terminal value is not there, 60-65% of an asset value comes from terminal value. That value will go down. And I'll show one stock where we lost, personally also I lost some money because market realized this business model is broken. That's it. They will realize tomorrow morning, then our bad time starts tomorrow morning, right? So I think terminal value வந்து நம்ம புரிஞ்சிக்கணும். அவர் சொன்ன கேள்வி very exactly. In some company, terminal value is negative or zero. Mathematically at least zero. That is why I said DCF should be applied for a long, stable, surviving, very good companies. நம்ம வந்து terminal value, we give 60 multiple to a company with one customer as a government without paying any cash flow. God bless. So having seen DCF, that's the first metric. The second is a small metric, EVA, economic, yes sir. இந்த பிரைஸுக்கு என்ன growth? So இது வந்து forward looking. நம்ம இப்படி நடந்து போறோம். இவ்வளவு தூரம் நான் நடக்கணும்னா எவ்வளவு அடி வைக்கணும்? அது வந்து 12% டிஸ்கவுண்ட். அவ்வளவுதான். Both are same. Right. Yes sir. ये மாடல்ல 15 வரைக்கும் போட்டுருக்கேன், கரெக்ட். See, generally high growth phase னு இருக்கும். சில கம்பெனி high growth phase 5 years இருந்ததுன்னா 5 years plus terminal. No, free cash flow generate பண்றது தான் நம்ம DCF பண்ண முடியும். இல்லனா வேற மெத்தட் பண்ணிக்கலாம். DCF மெத்தட் பண்ணனும்னா free cash flow generate பண்ற பிசினஸ்க்கு தான் நம்ம இந்த மெத்தடே வேல்யூ பண்ண முடியும். Typically analysts use 10 years. See, 15 years plus perpetual. See, free cash flow தான் யூஸ் பண்ண முடியும். But 15 years நான் எதுக்கு வச்சிருக்கேன்னா ஒரு எக்ஸாம்பிளுக்காக காட்டினேன் 10 plus 5 plus perpetual. But only maradu. The question you should ask is, will this company will survive and create value? அப்போதான் இந்த மாடல் யூஸ் பண்ணோம். அப்படி இல்லைன்னா இந்த மாடல் ஒர்க் ஆகாது. Slightly changes. See, this others on there is no single model, right model. If there is only single model, no, every stock price should trade in exactly correct. Your model will vary, my model will vary, his model will vary, correct? Somebody still watching that media channel will put more terminal value because I like the channel. நம்ம என்ன பண்ண முடியும்? See, you should not ask how is your house food. கேட்க முடியுமா? என்ன சொல்லணும்? ஃபுட் நல்லா இருக்கா நல்லா இல்லைனா? யார் சொன்னா? See, some answers are goes without saying. பசங்களை கேட்டா எக்ஸாம் நல்லா எழுதுனா சூப்பரா எழுதுன. That's not the day to ask. The day to ask is when the mark sheet comes. யார்கிட்ட கையெழுத்து வாங்க போறாங்க, கரெக்டா? டாடியா மம்மியா? Yes, that will tell you. So I think management always wants to tell what you want to listen. See, you don't tell you did not do badly, no. What I will tell you, உங்களுக்கு appraisal இல்ல. இவ்வளவு அசிங்கமா பண்ணீங்க. Nobody likes insult, right? See, management also knows it, but they'll tell no, எங்கனால இதான் பண்ண முடியும். உங்களுக்கு பிடிச்சிருந்தா வாங்குங்க, பிடிக்கலனா. Is there any compulsion to buy? There are 5,000 stocks. There are 1,000 companies listed in last 5 years. We have more plenty than a constraint. What we need, no, we should not invest tomorrow morning what got listed day before yesterday. We don't want to buy HUL today. I am very, very sure my friends are presented, but nobody wants to buy HUL. It's too boring, man. அதுல ஒரு எக்ஸைட்மெண்ட் இல்ல. எக்ஸைட்மெண்ட் வேணும்னா வேற எங்கனா போகணும், காசு பண்ணணும்னா நல்ல கம்பெனி வாங்கணும், இவ்வளவுதான். கரெக்ட்? So let's go on. I think till 3, right, my session. I think I am on time. EVA method. Sorry. That's it. EVA method, that's called economic value add. So typically ஒரு P&L ல பாத்தீங்கன்னா they will not deduct the cost of capital, correcta? What economic value add says is, please deduct the cost irrespective whether it is equity capital or a debt capital. So operating profit after tax deducting the cost of equity capital. You're getting it? So you take the operating profit overall, deduct the cost. So what it means is, company genuinely created value or not created value. So lot of companies pathina will show accounting profits, but they have so much of equity capital. அப்ப அந்த equity capital ஒரு cost இருக்கா? அந்த cost நீங்க deduct பண்ணீங்கன்னா they'll go loss. So a company which is not generating positive economic value add is actually not doing anything meaningful. So let me give you an example. Bank FD rates 10%. Just for the time being, don't ask me now which company, right? Bank FD rates 10%. There are project A, project B. Project A is simple. You float a private company, put all the money in bank FD, 100 crores. Year one end, how much profit you'll do? There is no other expense, just for simplicity. What's your profit? 10 crores, correct? Superb. All multiple கொடுப்போம். ஒரு 20 multiple கொடுக்கலாமா? Because that's a lower end of today's stocks. Correct? 20 multiple has become today a base rate, right? 20 is very cheap. 50 da konjam costly. Sorry, aidichu. Now I'll give you the same company, project B. They have run the business. That business generates 10% ROE. So how much? 10 crores. The cost of equity capital is 12%. So EVA model enna soluduna, before reporting 10 crores, for 100 crores, 12% deduct pannu, because that's cost of equity. So minus 12. So what is the end result? Minus 2 crores. Correct? So there are companies which is not fit to do business. Why? The return on equity less than cost of capital irundhuduna, they actually should not do business. Do you agree? Exactly. The alternative itself is better. So if you see lot of large index stock did not do well, right? You know which all names. Their return on equity is very close to cost of money. So what is happening? Market is not rewarding them. They're very close to book value or 2 book value. People are saying rumba cheap irukku. They are cheap because they are not adding economic value. If you deduct for the all equity, there is a price, their EVA is close to 0. So mathematically, if your EVA is 0, you should trade only at book value. Because book value is your cost, you are not adding value, correct? So when a company is trading at 5 book value means, apart from 1 book, you are paying 4 book. That 4 book is a summation of all EVA in the future. Idudha. Purinjada? So when you pay 20 book value, don't feel very happy. What you are paying, no? For 19 times of more book value, already neenga kudutittinga. You will only make money beyond that. So why I said Pilite is very interesting, no? Without the regulator were to speak, they always reported this slide for last 24 years in their annual report. It means the management is so transparent. I am not only reporting accounting profits, I am also reporting my internal economic value add after my equity capital. Right? So in the slide, I copy pannadha. It is not my slide. So if you see 2023, 2024, the risk-free rate is 7.1. The cost of equity of Pilite is assuming 13.5%. We only assumed 12%, right? Pilite is saying it's 13.5. No debt. So overall cost of all assets put together is 13.5. So if you look at the profit is 1792. Operating profit, cost for the equity is 1045, 769. The 769 is what the truly economic value added by the company. If you look at 1814, this is the profit they have reported in P&L, correct? They are profit making company. After deducting their equity charge also, they are reporting positive. So this company technically will trade above book value, correct? Because they are adding value to their organization. This is EVA method, generally used for consulting to tell the business if the stock price has to go up, your ROE should go up. Once your ROE goes up, your EVA model will go up. Eventually, the market will give you respect. But it's not generally used from a practitioner point. But or company or value add pannudha illiyandradhukku EVA should be positive. A consistent negative EVA company will trade less than book value. So, no, this is all capital. So debt, no, this is profit, operating profit after tax. You go to the last item, deduct all capital order interest charge. So equity number 0 than interest charge. You don't deduct equity cost, no, in the P&L. In this model, you are saying you charge equity cost and still tell me did you made money more than that? Ama. In the effective weighted average. 4th. Correct. See, okay, they have equity capital cost போட்டிருக்காங்க 13.5. So this is 100% equity funded. So 100 into 13.5 is 13.5. The debt is 0 because this is 100. So total answer is 13.5. So let me give you an example. Debt is 6%, 50-50. So 13.5 into 50, 6 into 50. So the cost of equity will overall will be like 10%. Correct? It's a levered company. Correct? Every debt you have to pay interest or only long term, sir? All. See, long term debt ஏன் நம்ம ஜெனரலா மெஷர் பண்ணுவோம்னா it's a strategic money. Payout cycle will be lumpy. ஏன்னா working capital வந்து rotationல போயிட்டே இருக்கும். ஆனா when you pay interest, no, you pay for all interest, right? You can't say I will not pay interest for short term debt. So you deduct all debt in this case. It is not I assumed, it's Pilite. So I think only Pilite treasury will know. But Pilite is assuming risk free is 7, risk premium is 6%. So cost of money, Pilite is assuming 13.5. Fund management, we generally do 12%. That's one the changing number, no. RBI policy before date was one rate, RBI policy after date will be rate come illa, because repo rates have come down. Sorry? See exactly, see what ROC will tell you exactly, right? What EVA method, no, ROC should be greater than cost of equity. Exactly. And that is only percentage. In EVA, it will tell you the value you got created. Both are same metric. That is why we say, right, if the ROE is 12, cost of money is 12, the stock will trade at one book. Correct? That's why a lot of banks trade at one book. People say banks trade one book. Obviously, no. They make a return on asset of 1.5%, 9 times leverage. You do ROE of 12%. Done? Yes. Cost of equity is not, it's a function of many things. The first thing is risk-free, government order rate. Next, equity risk premium. What is the risk premium you want to pay? So you refer all the country, Ashwath Damodaran does, right? For all the country risk premium, which is 5-6%. Then you add beta of the stock. In Pilite, the beta of the stock is less. So in the add will cost of. So it's a scientific way only, but this is, you can take it at a normal like 12-13%. If people want to do that 0.1, but on a simplistic basis, 12-13 is what today generally practitioners are using it.